According to Fitch Ratings, Singapore's private home prices will remain resilient over the next 2 years. That's despite high supply that we're seeing in the market. Eugenia Lim has more.
Seems to be good news for property owners here in Singapore, with expectations of modest growth in 2020. As you said, despite expectations of a weaker economic growth, as well as that surplus that we're seeing in the private residential space, about 39,000 units have yet to be sold. They're in the pipeline. So there were some speculations that could impact prices, but really there's consensus across the board that we're going to see some modest growth going into 2020. As you said, according to that Fitch rating report, the expectation is for prices to grow by 2% in 2020 as well as in 2021. And there's a number of reasons for this. Key to this would be the lower interest rate environment. We know that the Fed lowered rates 3 times, in total a 75 basis point cut for the year, and that could mean that loans will be more affordable for those who intend to make a purchase. And also a second reason, slightly more domestic, is that developers here in Singapore simply can't afford to lower those prices. We know that most of the land and most of the units that they hope to sell were bought on prices that were quite high and quite steep back in 2017 and 2018, when the en bloc frenzy was all the rage here in Singapore. So they simply can't afford to lower prices to suit whatever the market, whatever is happening at the moment. Now, another reason that we are expecting modest growth ahead in 2020 will look no further than the property price index. If you take a look at the past 2 quarters, we've seen it climb just slightly, but it shows some resilience in the market. In Q3, it rose by 2.1% on year, and in Q2 we saw a 1.2% rise in the second quarter of this year. Now, according to a Knight Frank analyst I spoke to, the improvement in sales and price indices really reflects some resilience and robust movement here in the Singapore market. And Fitch Ratings and Knight Frank, they're not the only ones that have consensus on this modest growth that we're about to see. Property Guru also expects growth to be between 2 to 4%. Christine Sun from Orange Tea and Thai also expects growth of 1.1 to 3% in the following year, and also CBRE analysts also expecting at least 1% growth in prices next year in 2020 as well. So some good news in the resilience of the property market here in Singapore.